It is a day that everybody awaits from the week. It's Friday. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Center. I'm Varmas Patakia, and with me as always is Vamakshi Dhoria. Vamakshi, good morning. A happy Friday to you. Now, the Wall Street was hoping for a happy session yesterday. Well, that didn't transpire as progressed, but it's the start of a new series for us today.
Absolutely, Varmas. Happy Friday to you too. And of course, the tariff drama continues to unfold. Yesterday there was a cryptic post from Donald Trump which said, he's a man from God and nothing can stop what's coming. And that was, I think, his way of probably saying that picture abhi baki hai.
Oh, absolutely.
But, on that note, let's get started with the top headlines. US futures slip after a positive close in overnight session after an appeals court temporarily reinstates Trump's tariffs.
Markets in the Asia-Pacific region have opened with a negative bias amidst the uncertainty surrounding the tariffs. The Nikkei is down over 1.5%. The GIFT Nifty is also indicating an absolutely quiet start to the June series.
Oil prices too fell over 1%, retreating from earlier gains, while gold prices rose about $3,300 on the other hand amid soft jobs data.
Auto major Bajaj Auto's fourth quarter results were a beat compared to expectations, with margins remaining above the 20% mark for the sixth straight quarter. The company has also announced a final dividend of 210 rupees a share, which is the highest ever.
The Ministry of Statistics will announce the GDP for the fourth quarter of last year and for the full year FY25 today. A CNBC TV18 poll sees the fourth quarter GDP at 6.85% and the full year at 6.3%.
At one point yesterday, the Dow futures were up almost 550 to 600 points. You're hoping for a strong session on Wall Street. Well, that didn't transpire, and that's showing up on the Asian screen as well. It's a start in the red. The Taiwanese markets, though, are shut for a holiday in today's trading session. So most of the other markets that are operating continue to trade with a negative bias. The Seng is down 1.25%. Similar sort of losses being reflected on the Nikkei as well in Japan. The Kospi is trading 0.3% lower, as is the Shanghai Composite. So it's a red screen on the Asia Pacific, and that is on account of the tariff flip-flop that has been happening, the uncertainty that has been created after the decisions that were earlier announced by the US Trade Court and then reinstated by the Appeals Court. So that drama continues in the US. We pull up the GIFT Nifty as well. It's the start of a new series for us today. An absolutely quiet start is what we are anticipating. We ended the session yesterday on a positive note, and the bulls would look to build on to that, Vamakshi.
Well, absolutely, Hormaz. The bulls will definitely be looking on to having a good Friday after the kind of week that we've had. But let's recap what actually happened in the US market. Wall Street ended the trading session higher. The Dow climbed 117 points, while the S&P 500 added 23 points. The tech-heavy index, the Nasdaq, was up almost 75 points. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were up marginally across the major indexes in Thursday trading, with gains somewhat muted amid uncertainty over conflicting federal court rulings on the president's reciprocal tariffs. The Dow ended up 117 points, the S&P 500 rising 24, while the tech-heavy Nasdaq advanced 75. Less than a day after the U.S. Court of International Trade struck down most of President Trump's reciprocal tariffs, a federal appeals court on Wednesday granted an administration request to reinstate them while the case works its way through the legal system. The White House had earlier told the appeals court that it would seek emergency relief directly from the Supreme Court if the ruling was not put on pause. Meantime, Federal Reserve Chair Jerome Powell met with President Trump Thursday at the White House amid the president's continued calls for lower interest rates. Central Bank confirmed the meeting and wrote in a statement that the future path of monetary policy was not discussed, but that the two talked about economic developments, including those for growth, employment, and inflation. The Fed statement also emphasized that Powell and his colleagues at the central bank are committed to setting monetary policy based on, quote, non-political analysis. That's what's happening here in the U.S. Back to you in Mumbai.
Bertha Coombs, thank you for that update from Wall Street. Now, reacting to the Federal Trade Court's order to strike down the reciprocal tariffs, President Donald Trump said that the ruling is so wrong and so political. Now, hopefully, the Supreme Court will reverse. Now, the court incredibly ruled against the US on desperately needed tariffs, and that the president must be allowed to protect America against those that are doing it economic and financial harm, is what Donald Trump said in his reaction to the trade court verdict, which was then reinstated by the US Appeals Court. Now, a federal deals court, as we just mentioned, has temporarily paused a lower court's orders decision that struck down the Trump's tariffs, allowing them to go back into effect for now. CNBC's Megan Casella has a detailed explanation of what has happened on this back and forth.
Starting with that ruling overnight, of course, from the Court of International Trade, saying the president did not have the authority to impose most of the tariffs we've seen so far. But the latest, as you just laid out, is that the Court of Appeals for the Federal Circuit did side with the administration, granting their request for an emergency stay, at least temporarily. So the court said that until June 5th, they're giving the plaintiffs some time to respond here. So a week from today. In the meantime, that means all tariffs that were in question here can remain in place. The administration had argued they would have to have this sort of stay, this sort of immediate relief. Otherwise, it would undercut ongoing trade negotiations and ongoing geopolitical conversations as well. The plaintiffs are already out, counsel for the plaintiffs, I should say, already out with a statement saying they view this as merely a procedural step and that they are confident that the Federal Circuit will ultimately deny the government's motion. That would mean that tariffs then are on pause if the court then does not move forward with the longer-term stay. Now, the White House, this is a win for them, at least temporarily, but they're also seeming unbowed here. They are very much clear-eyed about the fact that they have other options if this one does not move forward. Take a listen here to Peter Navarro, the trade advisor, talking with reporters just in the last hour or so.
The court told us, they didn't all but tell us, they told us, go do it another way. So you can assume that even if we lose, we will do it another way.
We know that there are still 7 ongoing Section 232 trade negotiations on things like copper, lumber, semiconductors, and critical minerals. All of those can lead to widespread tariffs, and there are a number of other statutes the administration is looking at as well. So this is certainly not the end of the road on the tariffs front, even if ultimately the court does rule against the administration.
Well, thank you so much for that, Megan. But investors continue to navigate a volatile global trade landscape and are cautious following a salvo of judicial developments revolving around tariffs. Hear out former Fed Vice Chair Roger Ferguson on how these uncertainties are hurting business leaders.
The decision makers wake up every day trying to figure out what's the tweet of the day going to be, what's the headline going to be, what commentary is going to be made that may throw planning into a period of uncertainty. And, these are, as I talk to CEOs, particularly when it comes to capital expenditure, those are decisions that take 4 or 5 years to actually play out. And it's hard to make a long-term bet, a long-term investment decision in a situation that seems so fraught and so uncertain. CEOs are telling us uncertainty, frankly, emanating from Washington to D.C., is slowing down decision-making and leading them in a position where they are far less confident than they were just a few months ago.
Meanwhile, even as China and the US have agreed on a 90-day pause on tariffs, US Treasury Secretary Scott Bessent said that further talks with China are a bit stalled. Listen into what he had to say.
Say that they are a bit stalled. I believe that we will be having more talks with them in the next few weeks, and I believe we may at some point have a call between the president and party chair Xi.
That's all we have on the global markets front, but how will all of these overnight cues impact our own markets? Our research team is now joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the F&O side of things as well. Firstly, Vinny joins in to get us all the market cues that we need to watch out for. Good morning, Vinny. It's the start of a new series. What are the cues you're picking up?
Hi, good morning, Horma. So yesterday, the end of the previous series, it was a volatile trading session that we saw coming in. Let's start with that because benchmark indices managed to close in the positive side, and we saw the benchmark indices, Nifty, Sensex, snapping the 2-day losing streak. Nifty closed about 24,800. Mid and small cap, that continued to outperform. And overall, for the week also so far, we have seen that outperformance coming in for the mid and small cap versus the benchmark indices. Metals were the gainers yesterday. We had realty that was gaining in trade as well. While in terms of drag, PSU banks a bit muted, as well as FMCG, also a bit of a drag and closing in the red. But FIIs, they continue to be buyers for the fifth consecutive session. Yesterday, they bought around 884 crores, while DIIs also were buyers, 4,287 crores coming in from the DII front. Now, what we're keeping an eye out on in terms of the update coming in from US, now the appeals court has reinstated Trump's tariffs, so that is something we are watching out for. On the domestic front, keep an eye out on the GDP growth rate data that will be coming in. So that is important to watch out for. A lot of US economic data points will be coming in on the front of the consumer sentiment side. So keep an eye on that. Yesterday, we did have those weekly jobless claims that came in. A bit of a rise that one has seen coming in more than what was expected. So that also is something that could keep the sentiment a bit muted. So today, what we're watching out for, Nifty implied open, just indicating a slight bit of a positive bias, more like a muted start is what we're watching out for as of now.
Watching out for a muted start. Vinny, thanks a lot for that. That does not take away from the fact that there are a lot of stocks to watch out for, and there were a slew of earnings that were reported after market hours yesterday. Mamakshi will tell us all of that.
Well, Hormaz, let me first start off with Bajaj Auto. It was a good run for the company this time around. Revenue came in above estimates, seeing an uptick of almost 6%. The margins have come at 20.17%. This is more or less in line with what the street was anticipating, and the net profit saw an uptick of almost 6%, slightly above the street's anticipation. Mascot, on the other hand, did not have a great quarter. Revenue was up only 2.3%. The margins have contracted to 2.8%, and the net profit is down as much as 51%. Ola Electric too did not have a good quarter. Revenue saw a downtick of almost 62%. They've managed to expand their EBITDA loss to 695 crores. The net loss too has widened to almost 870 crores. Suzlon, on the other hand, had a great quarter. Revenue saw an uptick of almost 73%. The margins have improved by around 200 basis points to 18.4%, and the net profit has seen a multi-fold jump, and that is because there was a deferred tax gain of around 601 crores. SJVN's revenue saw an uptick of 4.5%. EBITDA margins have come in lower at 47.7%, and the company this time around has reported a loss of 128 crores, and that is because overall higher expenses impacted the bottom line. Amara Raja's revenue grew by 5.2%. The margins have contracted to 11.13%, and the net profit was down almost 30%. So not a great quarter for Amara Raja. And lastly, let's focus in on NBCC. The revenue saw an uptick of 16.2%. The margins have improved marginally to 6.25%, and the net profit has grown by almost 30%. So those were some of the counters that you need to watch out for in trade today. But let's look at what the FNOQs are indicating, and we now have Mangalam joining in to explain just that. Good morning, Mangalam.
Good morning. So as we do at the start of every series, we say hello to June series, right? So not just today, let's look at the entire June series and how the May series went as well. Now, if you look at the previous few June series, the last June series, we saw a near 1,500 point move on the Nifty. But that was largely because, remember, last June we had the interim budget that came in from the government as well, the newly formed government. But bereft of any cues, June series typically is a bridge month where you see, post-May sort of cool off and pre-July, August sort of, bridge. So 2 to 3% on either side is what June series in the past has done. If you look at the May series, we're going in with 3 straight series of gains. In the last 3 trade series, we've seen about 2,200 points in terms of gains for the Nifty. And if you look at the rollovers at 79.1%, they're largely in line, as is the open interest that we're seeing on the Nifty at 1.26 crore shares. So while rollovers are in line, we're sitting on 3 series of gains, and the open interest is in line. What has changed? The underlying composition of long contracts. So the FIIs, while they rolled over overall on the same level as the previous 3 months, they've actually rolled over more short positions than long positions. So their long exposure has dropped to 20%. Remember, at the start of May and April series, it was 40 and 41%. So can the Nifty get fourth time lucky in the June series is something that we'll have to track for. Clients believe definitely. Clients are basically HNIs who have long exposure at 61% after starting the previous series with 45% long exposure itself. What are the key triggers for June series? Like I said, there's usually bereft of many cues, but we do have the RBI policy decision on June 6th. So the Nifty Bank will be in focus on account of that. Then obviously a lot of uncertainty around tariff updates, all global developments we'll watch out for. And as the start of June begins, we'll watch out and monitor the spread of monsoon as well, because that sets up the phase for the next couple of months.
Indeed, the start of the June series, and we say hello to that, hopefully on a positive note as well. Mangalam, thanks a lot for that. Take a short break. On the other side, we take a look at the poll numbers ahead of the 4th quarter GDP release. Stay tuned, back on the other side.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's talk about Bajaj Auto. The company reported a steady set of Q4 earnings with margins coming in about 20% for the 6th straight quarter. Sudarshan is now joining in with the earnings fine print. Good morning, Sudarshan.
Good morning. So it was an inline set of earnings from Bajaj Auto. Revenue was supported by healthy volume growth that company had seen. It had seen a 4% rise in volumes if you compare year on year. Also, margin has come in. Company has managed to hold on to margins above 20%, and that's for 6th straight quarter, and also announced final dividend of rupees 210 per share. Now, talking about the headline numbers, profit was up 6%. Even revenue and EBITDA have increased 6% each, and margin was at 20.2% versus 20.1%, and also it's 10 basis higher against our expectation of 20.1%. Good parties, even realization has improved and it's higher than estimates. Realization was up 2% year on year, and on a sequential basis, it was up 5%, and it was supported by increased volumes that company has seen for the premium end of this segment. Now, talking about some of the highlights, company says it has recorded double-digit growth in premium motorcycles, electric two-wheelers and commercial vehicles that have aided revenue growth. But in Q4, revenue growth was 6%, and it was lower than the double digit. And company say it's because of growth. There was a temporary suspension of KTM exports that has impacted revenue growth. But for Chetak, market share in Q4 of FY25 was at 27%. It has risen 1,400 basis points, and company remains the leader in these segments. Now, from the con call, some of the takeaways, domestic industry company believes that in FY26, growth is likely to remain in the range of 5 to 6%, almost at the same level that industry had seen in FY25. But for exports, growth is going to be healthy and seen in the range of 15 to 20%. So overall, earnings were in line, but outlook is slightly cautious for FY26.
In line with estimates, but a cautious outlook. Keep an eye out on Bajaj Auto. The stock is down almost 30% from the peak that it had made in September last year, which was almost close to 13,000 rupees. Sudarshan, thanks a lot for that. Moving on then, the Kospi, or the Ministry of Statistics, will announce the GDP data for the 4th quarter of last year and for the full year of FY25. Now, a CNBC TV18 poll is expecting that figure for the 4th quarter to be at 6.85% and the full year to be at 6.3%. Latha is here with the fine print.
The CNBC TV18 poll shows that the GDP for the 4th quarter grew by 6.8%, much stronger than the 6.2 in Q3, 5.6 in Q2 and 6.5 in Q1. GVA growth, gross value added growth, will be more modest at 6.5% versus 6.2 Q3, 5.8 in Q2 and 6.5 in Q1. For the full year, our poll, that is for the current year, our poll threw up a GDP growth of 6.3% only. That is the FY25 poll, compared to Kospi's estimate of 6.5. We are still speaking FY24-25. And last year, of course, FY24, it was a solid 9.2%. Now coming to the current year, FY25-26, our poll threw up a number of, again, 6.3%. This compares with the Reserve Bank's forecast of 6.5%. Now, let's go back to FY25. If FY25, the numbers are way below even our poll's estimate of 6.3%, that can move the Reserve Bank to cut rates a little more aggressively. So, the Q4 numbers are important for the upcoming Reserve Bank policy. It's the last data Reserve Bank gets before it goes into policy.
Well, thank you so much for that, Latha. We'll surely be keeping an eye out on the numbers that come through. But let's slip into a very short break. Up next, we get you cues from the commodities market, so stay tuned.
Welcome back. Getting you all the cues from the commodity space now. Manisha Gupta is joining in for that. Manisha, good morning. It was a confusing session on Wall Street last night, but are the asset classes equally confused?
Well, it has been a similar case for the commodities as well, where we have seen markets continue to be quite choppy. I'll start with the crude oil prices because we've seen a second weekly decline come in for this one. The markets are looking at the OPEC plus meet on 31st of May. This would decide the production for the month of July. Apart from that, the street is also reacting to the US GDP numbers, which have contracted by 0.2%. It is the first quarterly contraction in 3 years the markets were expecting. And the US crude inventories also have seen a bit of a decline, and that's exactly what the markets are reacting to. In the meanwhile, when you look at metals as a sector, well, gold prices have surged back above $3,300 an ounce. We also are reacting to the weekly jobless claims, which have also risen. And the U.S. jobless continuing claims are the highest since 2021 right now, supporting gold and silver and the copper prices as well, which are headed for a strong month of May, by the way. There are LME futures backwardations indicating tight supplies in the physical markets in the near term. That has been supportive for copper, which seems the most lucrative when you look across base metals, where aluminum are zinc are closing May in the negative.
Well, thank you so much for that, Manisha. But that's all we have on this edition of Power Breakfast. We leave you with the GIFT Nifty indicating a flat start to the trading session today. But don't go anywhere because Bazaar Morning Call comes up next.